Good day Forex trader. Your USD Forex signal, bearish flag signals strong pullback. There is a likelihood that the pair will have a bearish pullback today. Bearish view. Sell the Euro USD pair and set a take profit at 1.1250. Add a stop loss at 1.1425. Timeline, 1 to 2 days. Bullish view. Set a buy stop at 1.1355 and a take profit at 1.1420. Add a stop loss at 1.1300. The Euro USD pair attempted to stage a comeback as US bond yields retreated. The pair is trading at 1.1347, which is still more than 1% below the highest level this week. Eurozone inflation data ahead. The Euro USD pair has had a difficult period this week as investors focus on the rising bond yields. On Tuesday, the 10-year US government bond jumped to the highest level in 2 years. The jump in yields came at a time when investors are worried about the Federal Reserve, which has committed to tighten this year. On Wednesday, European government bonds also jumped. The most important one was the benchmark German 10-year bond, whose yield rose above 0% for the first time since 2019. Bond yields in other countries like Italy and Spain also rose. The German bond sell-off came shortly after the country's statistics office published the latest inflation data. The numbers revealed that the German inflation rose to over 5% in December last year. The Euro USD will react mildly to the December Eurozone consumer inflation data that will come out during the European session. Economists expect the data to reveal that the bloc's inflation rose to 0.4% on a month-on-month basis and by 5.4% on a YoY basis. These numbers will likely have no major impact on the Euro USD pair because the provisional ones were already released 3 weeks ago. Historically, the final reading does not have a major discrepancy from the provisional one. The Euro USD will also be affected by the latest economic data from the US. The country will publish the latest existing home sales numbers. These data will come out a day after the country published strong building permits and housing starts numbers. The US will also release the latest initial jobless claims data. Euro USD forecast. The chart below shows that the Euro USD price has been in a strong bearish trend in the past few days. It dropped from a high of 1.1487 to a low of 1.1320. Now, it is attempting to bounce back. However, a closer look shows that the pair is forming what looks like a bearish flag pattern. In price action analysis, this is usually a bearish sign. The 25-period and 50-period moving averages are also about to form a bearish crossover pattern. Therefore, there is a likelihood that the pair will have a bearish pullback today. GBP USD Forex signal, sterling rebound has no legs. The pair will likely pull back today ahead of the US data. Bearish view. Sell the GBP USD pair and set a take profit at 1.3550. Add a stop loss at 1.3625. Timeline, 1 to 2 days. Bullish view. Set a buy stop at 1.3650 and a take profit at 1.3725. Add a stop loss at 1.3600. The GBP USD pair drifted upwards after the latest UK inflation data and after the government announced plans to ease COVID restrictions. The pair is trading at 1.3628, which is about 0.45% above the lowest level this week. UK reopening. The UK entered Plan B measures in November as the number of COVID-19 cases rose. Now, Boris Johnson, the embattled Prime Minister, has laid out plans to reopen the country. In a statement, he said that the country will end these restrictions on January 27 in a move that was supported by most businesses. The end of Plan B measures means that the government will stop asking people to work from home. It will also not require people to wear masks in public. The announcement came at a time when the number of new cases has started to fall. Over 3.4 million people were infected with COVID-19 last week. That was a lower number than the previous week's 4.3 million cases. The GBP/USD also tilted higher after a stream of positive data from the UK. On Tuesday, data by the Office of National Statistics, ONS, showed that the country's unemployment rate declined from 4.2% in October to 4.1% in November. The economy has added thousands of jobs while the number of claimants has fallen. On Wednesday, the UK published the latest consumer inflation data. The numbers revealed that the country's headline CPI rose from 5.1% in November to 5.4% in December. Core inflation, which excludes the volatile food and energy prices, rose from 4% to 4.2% in December. These numbers were better than what most analysts were expecting. The GBP/USD pair rose ahead of the important Philadelphia Fed Manufacturing Index data that will come out later today. Other key numbers to watch today will be the U.S. initial jobless claims data and existing home sales numbers. GBP/USD forecast. The 4-hour chart shows that the GBP/USD pair declined sharply on Tuesday as the US and UK bond yields jumped. As it dropped, it managed to move below the ascending trend line shown in black. Now, the pair has bounced back and moved slightly above this trend line. It has also moved to the 25-day and 50-day moving averages. Therefore, the pair will likely pull back today ahead of the US data. This means that it will likely retest the support at 1.3550. AUD/USD Forex signal, pullback to 0.7150 can't be ruled out. The pair will likely resume the bearish trend and retest the lower side of the channel at 0.7170. Bearish view. Sell the AUD/USD and set a take profit at 0.7150. Add a stop loss at 0.7300. Timeline, 1 to 2 days. Bullish view. Set a buy stop at 0.7260 and a take profit at 0.7330. Add a stop loss at 0.7200. The AUD/USD pair bounced back in the overnight session as the US dollar retreated. The pair is trading at 0.7225, which is slightly above this week's low of 0.7173. US dollar retreats. The AUD/USD bounced back even after the relatively strong American housing data. According to the Statistics Office, building starts rose to a 9-month high of 1.7 million in November. The 1.6% increase was attributed to the rising demand for apartments rose. The Commerce Department noted that the numbers were pushed higher by the multifamily sector. Further data revealed that building permits also rose in November. They rose by 9.1% from the previous month to an annualized pace of 1.87 million, the highest rate in almost a year. These numbers send a picture that the American housing market is strong. Later today, the country will publish the latest existing home sales data. Analysts expect these numbers to show that existing home sales rose to an annualized pace of 6.44 million in November. While the housing sector is strong, analysts expect that the sector will start to normalize later this year as the Federal Reserve starts tightening interest rates. The bank has hinted that it will implement 3 rate hikes later this year. The AUD/USD pair also tilted higher as investors watched the performance of the bond market. After rising to the highest level since December, the 10-year Australian bond yield fell to 1.96% in the overnight session. The same view was seen in the United States, where the 10 and 30-year bond yields retreated. Meanwhile, analysts expect that the strong recovery of the Australian economy will push the RBA to start tightening later this year. Data published by the Australian Statistics Bureau showed that the unemployment rate declined to 4.5% in December. AUD/USD forecast. The 4-hour chart shows that the AUD/USD pair bounced back on Wednesday. The comeback came after the pair dropped to the lower side of the ascending channel that is shown in black. It also moved slightly above the 25-day and 50-day moving averages. It also moved slightly above the 38.2% Fibonacci retracement level. Therefore, the pair will likely resume the bearish trend and retest the lower side of the channel at 0.7170. This view will be invalidated if the price moves above the resistance at 0.7260.